Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of LikeFolio. Today, taking a look at on holding and that sector in general. Listen, Andy, that one's been the stock has been pretty beaten up this year. There's been concern across the sector. When I look around the floor here at the stock exchange, a lot of the guys we're on, I'm curious to know how it ranks now when you look across and compare it versus, say, Mahoka and other brands.
Yeah, ON has been, the stock has been thrown out with the bathwater here, but LikeFolio data is still absolutely popping in terms of web visits. Site traffic's up 15% year over year. That's beating Under Armour, Adidas, Nike, all of the competitors. And this is a company that's created a product that, if you go talk to any of those guys or any of those ladies, everybody loves these shoes when they put them on, and they become very loyal customers. So I think we're now in a position where we can say the stock's down enormously this year, I think 35% year to date, but the consumer loyalty, the consumer demand for the products is so high that we've got one of those kind of classic divergence opportunities that LikeFolio loves to bring to your viewers and to our clients, and that is, look, if you're looking for companies that are doing right by their customers, that are seeing growing demand, that are in the right sector, which is luxury and exclusive type of style, then this is a stock worth looking at here at 35% discount compared to where it was at the beginning of the year. So everything we're seeing for ON is very positive from a consumer perspective. From a mega trend perspective, they're on the right side of the K-shaped economy. So we really like what we're seeing here from the company, and we consider what Wall Street's doing with the stock to be a really solid opportunity for investors.
Yeah, Andy, down 36% just so far this year. That one chart kind of sticks out to me, and you mentioned it, that bifurcation that we're seeing between what your data shows and the stock price. That's probably the widest gap that we've ever seen in that. Do you feel like ON Holdings is getting thrown into this bucket where we've seen the deterioration in share from Nike, from Lululemon, anything in athleisure, anything in maybe athletic apparel, where, hey, ON's just getting thrown into that boat, even though your data is saying the opposite at this point, just because we've seen some softening consumer trends overall, but maybe that doesn't apply to ON Holding, right?
Yeah, and they're also getting thrown out, I think, for decent reason because of tariff pressures. I think that's a fair reason to be skeptical about ON's stock performance over the next 6 to 12 months. But if you believe in buying companies that have really loyal and growing customer bases and that service the type of customer that has money, is willing to spend, and stays loyal to brands for a very long time, then I think ON Holdings is for you. And then to top it off, their expansion into Asia has gone remarkably well. China same-store sales up 50%. Those customers are chasing the same thing as U.S. customers have already discovered, and that is, status, quality, and fitness culture all converging. So, we really like it here. We think there's some valid reasons for throwing, ON Holdings stock out a little bit, but there's also a lot of misconceptions about this company and just throwing it out, like you said, with all the other footwear companies, which we think is completely unfair.
So let me ask you that. So I know that, from your sentiment, it looks like there is still strong sentiment or an interest in ON Holding. And when you look at analyst views on this, they are largely in the buy camp on this one, actually. So there is conviction, but it doesn't seem like that's translating to investor interest. What do you think is the, issue here? Is it because just forget about the whole group? Because as you mentioned, the pressure that we've seen across the board, whether we're talking about Nike and its turnaround or beyond.
Yeah, I think that one of the reasons that, I love what you guys do is because you dig in beyond what the kind of momentum traders or the basket traders on Wall Street will do, which they'll just put a bunch of stocks together in one basket and just say, look, we're not going to look at that until this one macroeconomic condition is solved. But inside of those baskets are often jewels, diamonds in the rough. And I think ON definitely fits into that category here because, again, when you find companies that are getting thrown out by Wall Street for a variety of macroeconomic reasons, but at the same time continuing to, build their base and build loyalty among their customer group, then that often has translated into incredible opportunities for longer-term investors.
Andy, real quick here, going into this, it seems like you guys are, an earnings score that's probably elevated above what the street has at this point. But, when you look at this, everybody's talking about the top, the affluent, consumer at this point is still spending. This is a more affluent product at this point, and you see that brand loyalty that's starting to come into play here. When you look at this, are you seeing any trends going into a lot of these retail earnings that we're going to get over the next couple of weeks that there might be signals out there in other areas and sectors that are going to get punished this quarter, or is the bar relatively low for a lot of these stocks?
Yeah, I think the bar is relatively low, and we saw with Ralph Lauren, that ticker symbol RL. It's just a steady kind of premium-driven growth. Again, the bar was low there, outperformed off of sentiment lows. So we think that there's opportunities in individual stocks in this market that Wall Street just isn't recognizing yet, and that's exactly how we like to play it. I will say, in this earnings season, we've seen kind of a sell-first mentality across the board, and some of these names have gotten really harshly punished. So I'll leave it up to you guys to make sure that we're defined risk going into earnings. But long term, we really, really like this stock and think that they're executing across the board for their customers, and eventually Wall Street will catch up.
All right, great stuff. Thank you so much for bringing your data today, Andy. It's super helpful. That's Andy Swan, co-founder of LikeFolio. So now to get the trading perspective on all things on holding, want to bring